morning, everybody. It's Wednesday, January 24th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. Be more than happy to get to it during the show. Quickly here, overnight markets had March corn up 2 1/4, 448 3/4. March soybeans were up 3 1/2 at 1243, and March Chicago wheat was up 6 at 602 1/2. Didn't have any export sales out here this morning, any announcements. We will have export sales for the week out tomorrow morning. We're back on schedule. I know a couple weeks there we had some holidays there, so things were delayed, but we will be back on our regular schedule. We were talking here this morning, we continue to get, more and more private analyst estimates as we're going to, proceed into planning intentions, which will be the next, the next big report that will be, shape the way that we go through the spring and into planting. And you just running numbers. I posed the question here this morning, and I'll kind of get some feedback from the fellas, but if corn has a 9 in front of it in any capacity on the acreage side, that's just too much at this stage with what we know. And I guess agree or disagree, maybe we can kick it around the room. I'll throw her over to Jace to start us off, but that's just kind of, from the numbers we're running, that's kind of what we see right now.
Yeah, that seems to be the guesses out there. We'll see. I mean, there could be big misses on this March 31st report for sure. And we've talked in the past about the quickest way to lose corn acres is with a low flat price, versus a really high soybean price. So when margins are good, growers plant corn. When margins are tight, we tend to see more of a switch into beans just because it's a cheaper crop. You can borrow less money, with these interest rates. All these different things can affect corn acres more dramatically in tighter margin years. So, we'll see. I would expect us to have a little bit of a surprise and lose more corn acres than what most analysts are talking about. If you look at, if we set a spring price kind of where we're hovering at right now, let's just call it 480. The majority of growers use a revenue protection policy of around 80%. So at APH, a grower wouldn't have a price protection, wouldn't have that revenue guarantee down until like 385. So there's a huge gap between where growers break evens are estimated to be at, a 520 kind of area, and where their guaranteed level really is, right? So that's a lot of risk going into this crop year. So if you're putting pencil to paper as a grower and you're looking at the amount of risk, or you're going to your banker and working through the numbers, and you're going to borrow another couple $1 million, and you look at the numbers and you look at kind of the market setup right now, it's kind of a scary proposition to plant a bunch of corn. So it wouldn't surprise me to just taking some of that risk off the table, planting more beans this year. And that could be a huge effect. Even a small change from a lot of growers makes a world of difference in what kind of acres numbers we could see.
Yeah, so we're looking at a lot of cost of productions from really, across the corn belt, high production areas to some of the fringe areas. Ben, I thought it was interesting. We looked at, 3 different area cost of productions yesterday for corn. We're doing a little analysis for some presentations, and we're still coming up with that, call it 875 to 1100 number for, mid-level upper producing corn growers across the Midwest. To Jason's point, you start only having the ability to lock in, a true revenue protection of 380 or some number down in that area. I mean, how does that not drive you more towards, making a rotational type of decision? What's your thoughts there?
Well, I think you hit it on the head with Jason. With a small change can make a big difference, right? We know that a lot of people are really stuck to their rotations for their agronomic practices, but there is that that 5 to 7% that people say, oh, I can I'll switch this or switch that. Well, 5% is really probably what we need from some of the estimates that are coming out. in order to not make the corn balance sheet extremely burdensome going into next fall. So it can happen. I think it's the market's job to make that happen, to figure it out. When you look at the ratio, we've seen beans gain on that here over the last week, and I think that should continue to happen. Our worst case scenario would be a declining bean market and put both crops in a really difficult situation. So I think the market is very good at finding these things and forcing the shifts that we need. I also think that the producer is far more sold in soybeans than corn, which does create a path of least resistance, especially if, in the next 4 to 8 weeks, we're going to find a lot more up about what's going on in South America. The market will figure it out before we get estimates. Some concerns on what happens in the next 10-day forecast for Argentina. So beans are at a critical point here on the chart. This is a back and fill and a dead cat bounce, or we're gonna continue from here and try to head up to that gap area. And maybe it's a combination of all of those things combined that we probably need more soybeans than we do corn. And I think the market's going to figure that out. And you can spitball and look at math. We were talking about ratios here, and what would it take to see a sizable shift out of corn into soybeans? And I think it's that ratio at going out to 2.7, potentially making new all-time highs on that. I think that the soybean pink elephant in the room is the fact that we're behind on export sales. So both commodities have their challenges in front of them. Corn's actually been doing decent demand. We just haven't seen a big slug of purchases from China. Hopefully we're in a place now where that can start to materialize, where we've seen some really big purchases in the past, and a combination of those things would work. And you kind of throw numbers out there, and again, this is not a recommendation or we're saying that we're headed there, but if you can get 13.25, 13.50 new crop beans and $5 D's corn, that puts that ratio right at 2.7. I think a number like that would definitely encourage a bigger shift in what we're seeing from private estimates today.
Sure. And we're, by all accounts too, we've recharged, the soil across the Midwest here in the last 3 to 4 weeks by all estimations. I think Drought Monitor has shown that. Certainly anecdotally, talking to the growers we work with, I think once this stuff melts off, we're going to be pretty pleased with, some of the moisture that we've been able to put back in. So that all factors in, right, guys? They may be excited to plant corn, and we'll just have to figure it out. We'll have to see. Let's shift gears here just a touch, guys, on the wheat side. We'll talk briefly. Jace, you mentioned that, it is sort of seasonally, we'll see a bounce through this time frame, but yeah, we are bumping up against some numbers here. I thought maybe just worth pointing out.
Yeah, sure. You look at wheat prices, they're cheap, just like corn. We're not going to plant nearly as many acres, or we didn't plant nearly as many acres as we did, the last couple of years with just higher prices. Going into the spring, summer, there's usually, outside of trying to sound really smart or something, we usually see a couple opportunities in wheat in that time frame. You go look back at years, and it doesn't always happen, but I'd guess 75% of the time you get a nice run up in wheat, a little wheat scare, something happens, and that's, if this is a bear market, if this is a multi-year bear market, and you wait for those opportunities and you jump on them, and you got a plan together where, this is what I'm going to do when that price gets there. I think is the way to play it. Pick your price targets, something reasonable, and just be looking for that little run up and take advantage of it.
Sure. So a lot of what we've been saying and practicing on catching up old crop corn too, right, if you see some of that short covering activity come into the market for whatever reason, at least be prepared and have something in place, right?
Yeah, and I was going to make that comment when we were talking about corn too, right? Like, so if we set this really low spring price, and you got your crop insurance policy, and it's not giving the level of protection you need. Do your homework, work with your crop insurance agent, call us, talk to us. A lot of times there are private products that can get really creative on helping improve that spring price if there is a market rally. And sometimes these things aren't worth it, but sometimes they are. Sometimes there's that nugget that you can find that makes a lot of sense to do. And let's say you get your crop insurance policy, and then we lose all these corn acres, and then there's a Safrina weather problem, and the market setup is there for a nice corn rally, right? Everybody right now is trying to put corn down like it's never going to rally. And every year that setup happens, there is a rally for whatever reason. So, get a marketing plan together. If not, at least do your homework on your crop insurance policy. That could be a really good marketing plan for you to be able to step that coverage level up if an opportunity presents itself.
That's a fantastic point, because I think we've seen, especially the last 2 years, Jace, that we've had a lot of guys, a lot of operations that have stepped outside of the box, and whether it's paying up for additional coverage using some of these private products, but even some of these banded products that we've started to analyze that can get you a true higher percentage of coverage. This could be and those are all conversations we can have on an individual basis, but just be cognizant that in 2 weeks or so, we're going to start setting that price and going to need to have those conversations. Yeah. So all good points. Ben, what do you got over on your side?
Yeah, I just to kind of jump on Jason's comments there for a second. I think there's some, being aware of those structures that you can get through private products. It creates a level of flexibility and preemptive type of strategies that you can take looking forward, make a lot of sense. We mentioned the sentiment of how bearish the corn market is, right? Everyone knows that. It's no secret. We've traded those prices. We've traded those things. And I would go back to, in my trading career in the last 15 years, we're almost as negative now as we were in COVID, maybe not quite as doom and gloom. And then going back to, 2016, 17, trade war type thing. So it's a lot of it's been baked into the cake as far as the negative sentiment, and the positions are in place here that there's nothing that says it can be an outlier that would show us possibility to get some good marketing. And I was asked this morning, I do a weekly call for a bank and their producers, and they kind of prodded me on, what do you do? And my mindset is the exact same thing as, first of all, you got to be sharp with your pencil. You got to define your margins. You have to define your risk. And then you have to move forward and kind of reset your expectations and use strategies that fit your needs. It's a process. It's not picking the high. It's not picking the low. And stick with that process. It's over time, it works, right? So know those numbers. Use strategies accordingly with your advisor, and keep shooting and moving, as they say.
Yeah, very good. We're going to be coming into the open here shortly, guys. Ryan, what do you got on the meat side for me?
Well, it was a good close all around the horn yesterday. You had feeders, hogs, both getting up to price levels we haven't seen since November. So it's been a really good rally. Just kind of feels like, at least on the meat side, everything's been pretty strong. You got choice beef back above 300. We haven't seen too much cash trade so far this week, but I think the expectation is still for steady to a little bit of a higher trade. And seasonally, meat prices should be kind of pretty firm between now and the next couple months. So I think everybody's trying to get in front of that right now. Kind of looks like that's the trade. So overall, not really much news here to speak of. Couple of really important dates. We got the January 31st semi-annual cattle inventory report. February 2nd is going to be Feb option expiration, and the February 5th is first notice day. So we're going to see probably a pretty big roll start to factor going from Feb into April, especially because there's over a $3 spread, getting a nice premium in April right now. So I think shorts that aren't going to be able to move anything in that time frame are likely to potentially roll to try to capture some of that. We'll see. I don't know if that's necessarily the greatest idea, but I've heard some chatter about it. But overall, the trend is your friend at this point. And I think the only thing to really shake that up is a new piece of data that the market's not expecting. I don't think anybody's expecting any real expansion on the 31st report. So seems like we're just going to keep trading the day-to-day news right now, which has been generally pretty positive.
Very good. Let's appreciate the update there, Ryland. Just came into the open. We got March corn up 2 3/4. 4.49 is the last. March soybeans are up 4.5 at 12.44, and March Chicago wheat's up 3 1/4 at 5.99 3/4. Good open here this morning. A couple of administrative pieces before we wrap today. As we've been talking about, January 29th, please mark that down on your calendar and also pre-register. We've got that link that has been sent out to the AgYield consulting clients that are listening here. And we're going to have John Wenzel from StoneX. John is the director of energy markets and fuel, and he will be visiting with us about those the trends in those markets as we progress into springtime and get into planting. So should be a really good conversation. It's gonna be open for conversation and questions for John. So that'll be really good. That'll be the 29th at 2 p.m. Central Time. So please put that on your calendars. Also want to give a shout out to all of our listeners. We are approaching 100 subscribers, which, as we kick this thing off, we could have never imagined that we'd get that many people. We're really excited about it. We're having a lot of fun, and we hope that, on a day-to-day basis, the value's there for you. We got a lot of exciting things planned for 24, some exclusive content. We've got some special guests that we're going to have in the war room. So once again, we from AgYield appreciate everybody tuning in every morning and participating. If you like what you're hearing and seeing, click on that like and subscribe button. And, we certainly appreciate that. So to close, we've every day we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time, every day that the markets are open. Mr. Jack will be in tomorrow hosting. So everybody take it easy on Jack, but he'll be with us in the morning. I'll see you guys on Friday, but hope everybody has a great day and appreciate you tuning in this morning.
Yep. Thanks, guys.
Thanks, Dan.
Thanks, Dan.